What's up, guys? We're back with another video, and today we'll be going over concept trading in the market. An example of this is what we call price action. This strategy can be applied when analyzing any market. In many scenarios, we can identify patterns, trading opportunities, and simply apply it for backtesting. When following price action, we like to keep it simple when looking to take a buy or sell. Rather than basing a trade on assumption, we look for trend confirmation or price holding above or below key levels and then go from there. Let's make our way over to breaking down the market with an experienced trader from our group. But before I forget, be sure to follow our Instagram and Telegram channel provided at the end of the video. If you have any comments, feel free to leave them below or refer to the other videos on our channel if you're looking to seek more knowledge.
What's going on, guys? So the first example we're going to be going over here today is the S&P 500 on the 1 hour chart. Right here on the right side, we got a clear head and shoulders market pattern, but we don't always like to base our trades off of just one market pattern. We like to base it off of price action as well. So we have to wait for confirmations in order to get into any trades, whether that's a buy or a sell. So this first example we're showing you guys is the S&P 500 live market right now. We had a recent head and shoulders. So as you can look deeper into the head and shoulders, we got our left shoulder formed on the left side. And then we had price go down and respect that support, and then it made that higher low, then making a higher high, making that head formation, and realized that the market did not go higher than the head. So that was a found resistance level, pushing market level down. Okay, then it went to retest that neckline. Then it made the lower high at 32.80, and the main thing that we wait for is confirmation in the market. So we're gonna always wait for that breach down to the downside past that neckline, which it did here in this example. And as you can see, we have a distance drawn from the head to the neckline, and then we have a vertical line drawn from the neckline down, which is going to be the same distance if you get a clear, valid head and shoulders market pattern. So that's one of the main things we wait for, is just the clear breach and then the hold. Then we get our entry ins. So on the example to the left side, we got an inverse head and shoulders, which would set us up for the buy. So once that left shoulder is made, and then it makes that lower high, then it makes the head formation. We're not always going to get in here automatically. We always like to wait for that right shoulder to be made and then breached to the upside and then held, and that's going to give us confirmation to be able to get into a buy opportunity on this pair. So without the actual breach and hold, you really don't have confirmation until then. All right, so for this example over here on the left side, we have an inverse head and shoulders, which is actually the opposite of a regular head and shoulders market pattern. We have it upside down. So rather than the head being at the top and the shoulders being under, for the inverse, we got the head at the bottom and we got the shoulders on the top. So the main thing that we like to look for, obviously, is the confirmation. Okay, so we got our left shoulder being made, and then we got the lower low, which is the head being made. And notice here that after the head is formed, price does not breach below that. So that's the main thing to look at when you're looking at this formation, is the right shoulder is made, price holds support, and then the higher low is made. So then it breaches the neckline and then holds, which is the main thing we like to see before we get into this buy opportunity. Is we like to see the breach, we want to see a retest, and then we want to see those higher highs being made. So once we get the retest, that's our confirmation to get in. And another thing is from the example before, is you can measure from the head to the neckline, and then the neckline all the way to where our take profit is going to be. So on this example, we would have gotten a solid 20 pips out of this trade. At a dollar lot would be a $200 profit. So like I said before, the main thing we like to look for in these type of setups and market patterns is you want to look at price action, and you want to make sure you get a breach, retest, and a hold. Held support or resistance in whatever setups you decide to take, whether it's a buy or sell, the inverse or regular. So this is a few examples on how it is that we enter the market. So in this example, we got here for you guys is going to be on GBP, JPY, excuse me. We got a prime example here for inverse head and shoulders. We got the left shoulder being made, which is highlighted. And we got that lower low being made, which is the head. And the main thing I want to point out to you guys is price was not breached past the head. There was no lower low made past below the head. So that's one thing you guys got to keep in mind. Okay, and then we got the up. We got the push up, and then we got that higher low, which made our right shoulder. And then we got our neckline, which was breached and then also held over. And then it went up for the same amount of distance from the head to the neckline, which went from the neckline all the way to our take profit. It's the same amount of distance. If you measure from the head to the neckline, you measure the same amount of distance, and that's where you're going to take your profit at. So the main thing to pay attention here, guys, is just to watch that neckline. You want to look at price action and see whether it's breaching and holding or if it's rejecting, because, you know, these market patterns are not always 100%. So you got to make sure you pay attention to price action, and that you get in only when you're sure it's going to breach and hold. Okay? So now we got an example over to the right, which happened right after this inverse head and shoulders move. Okay, we got a prime example, a regular head and shoulders move. We got that left shoulder being made, and then we got a higher high being made, which made the head. And notice, guys, that resistance was hit there at 140. Price did not breach higher than that level, which shows us that the buyers are dying out and the sellers are starting to come in. So as price then breaches, it doesn't breach down, it goes down and tries to retest that neckline, holds support over it, but then ends up making that lower high with all those dojis, which shows signs of weakness in the market. So then once we get that breach down below the neckline and the hold, that's going to give us our confirmation for the sell, okay? So the main thing to pay attention here is that it breached the neckline and then it held, and it went from the same amount of distance from the head to the neckline. You place that on the neckline out to your take profit, and it's going to go the same amount of distance every time, guys.